So Vince, we're moving on here to kind of a follow-up story to a show we did, I don't know, 3-4 months ago, something.
Yeah, some time ago.
But basically it's a follow-up to 3G Capital, the private equity buyout type firm, and all the restaurant brands they've snapped up, which in this case is Burger King and all, and the profits and the success they've had with this so far. So they just reported earnings for their Tim Hortons, Burger King brands. How are things looking?
Sure. So Restaurant Brands International for full year 2015. I think it was really impressive to see Tim Hortons enjoyed comparable store sales growth of about 5.6%. Burger King logged 5.4% growth. This is in constant
These are
currency.
almost Chipotle-ish numbers from back in the day.
So pretty impressive for both of those brands. And also, they opened 155 and 631 net new locations. That's respectively for Tim Hortons and Burger King.
Did you, if you didn't catch this, that's fine. Is that mostly Tim Hortons or is that mostly Burger King?
No,
openings?
that was 630. The 630 is for Burger King. They have a much bigger network.
Oh, wow. Okay.
And so their total store base increased about 4.2% during the year. And both businesses saw a lot of successful promotions and new products coming out. And they also were pretty aggressive in terms of their overseas development in these new in markets like in the Middle East and Europe. And the stock, investors are really excited. It's trading up, I think, about 5% when I checked in early morning trading. And the main theme I wanted to bring up is how those results compare to some of the other big fast food burger chains. So McDonald's also reported earnings recently. They saw their comps go up about 1.5% in 2015. But the thing is, momentum really picked up for them during the fourth quarter when comps were up 5.7% in the U.S. because of the launch of all-day breakfast.
Oh.
So they're seeing some really nice momentum there from that promotion, and it seems like that was a big success that's helped turn McDonald's around.
Right.
When honestly, it wasn't that long ago when people were thinking about writing the obituary for that company.
So on that note, with just the rollout of certain products in order to draw in customers, talk to me about hot dogs and Burger King.
Yes. Interestingly, the Burger King announced that they would actually start serving hot dogs as part of their regular menu. So, a consistent menu offering, not like some special promotion. And so they've been testing this for about 18 months in markets like Salt Lake City, Memphis, Baltimore, Detroit, and Kansas City. So the hot dogs are launching on February 23rd. And because Burger King has, I think, over 7,000 locations in the U.S., they're going to become the largest chain to offer hot dogs as part of their regular menu.
Right.
And there's a tie-up here with who you mentioned earlier, actually, with 3G Capital, because 3G Capital, obviously, they brought together Burger King and Tim Hortons at the end of, I think it was 2014. It was a big, $11-12 billion deal. So obviously, we talked about 3G Capital again also a few months, or maybe half a year ago, in the big Kraft Heinz mashup. And
of course, Burger King has Heinz ketchup everywhere. So anyway,
exactly. So that's as if that's not already part of it. Kraft Heinz also owns Oscar Mayer, which is working with Burger King to offer up these hot dogs.
Gosh.
So it's just kind of a funny thing where 3G Capital obviously leveraging the companies in their portfolio.
Of this little arrangement is,
the strong results that we're seeing from Burger King, from McDonald's, also goes to Wendy's, who I typically think of as like the number 3 player in terms of traditional fast food, or for burgers at least. Their same restaurant sales were up 3.3% for 2015. And all of them seemed to enjoy like accelerating comps during the fourth quarter. Some of them attributed that to some like their promotions, but also the really warm weather during the winter maybe helped keep store traffic up.
Yeah.
And overall, I just wanted to bring this up really just because a lot of people tout the fact that these higher quality, better ingredients, fast casual chains are going to be the way of the future, going to start replacing a lot of the traditional fast food players. But the fact of the matter is, like, these companies and their management teams seem to be adapting very well and offering very value-minded promotions like the 2 for $5 deal or the 4 for $4 deal that these companies are competing with. And it's resonating with people. So whether it's breakfast or hot dogs, we'll see how well that works. These companies
You want to go get one? I kind of want to go get one.
Are far from being on their deathbed, so to speak.